Hi, everyone. Welcome to Ecosystem Day at Skoll World Forum, hosted by the School of Impact. Today, we'll be discussing JEDI, impact investing and capacity building, the field, methods, strategies, and how we can build capacity for justice, equity, diversity, and inclusion. Today, I have with me an outstanding panel of experts and thinkers who are going to discuss not only their work, how they see strategies and best practices moving forward in justice, equity, and inclusion, and where we can go and what we're doing. We'll also take some questions from the audience at a later time, so please feel free to write questions in the chat, and I will make sure that we get to them hopefully by the end of this panel. Quickly, the School of Impact was created to forward education, entrepreneurship, especially within the field of social entrepreneurship, because we believe that to achieve the UN Sustainable Development Goals, it takes everyone. And we're leaving talent on the table by not engaging people of color, women, and those from marginalized backgrounds in this global movement and work. So today we're having a discussion with some of the leading experts in the field, talking about ways that we can improve not only the education of entrepreneurs, but also how we can increase access to capital for life-changing work. I have the pleasure and distinct honor to introduce you to Dr. Barbara Krishon, Mr. Holden Lee, and Ms. Yulili Onavapuri. Thank you for being here. Welcome.
Hello.
Hello, welcome.
Let's start with some quick introductions. I will start just from where my screen is here. Dr. Krishon, would you like to give a quick introduction?
Sure, thank you. And I'm glad to be here. And I'm sure you all have been busy listening to the wonderful panels of the conference the last few days. I've listened to some great panels. I am at the University of Pennsylvania. I'm the Senior Innovation Advisor and have been involved at Penn for the last 10 years, looking at education, entrepreneurship, and how do we train entrepreneurs? How do we build them? Created the incubator, created a small seed fund, and created our Masters in Entrepreneurship program, which Bobby is a graduate, and also have been involved in our now Global Certificate on Innovation and Entrepreneurship. I have been involved in social impact investing and private equity investing and early stage investing for quite some time. I ran a private equity fund, and then I got involved in running an incubator fund, and now I'm involved in angel investing. I recently published my new book called Innovate Hers, Why Purpose-Driven Entrepreneurial Women Rise to the Top. And it looks at what are the entrepreneurial mindsets of these entrepreneurs that we're looking to help them move forward and seed their work. Thank you.
Lily, would you like to go next?
Thank you so much for having me, Bobby, and great to see all of you virtually. My name is Lily Onavapuri. I am co-managing partner of Kapor Capital. Kapor Capital is an early stage, meaning pre-seed, seed, Series A, social impact venture capital firm. We are focused on investing in companies who close gaps of access and or opportunity for low-income communities and communities of color. Excited to say with this new fund, our Fund 3, we've expanded our impact work from just focusing on the US to expanding it internationally, realizing that we can have a bigger impact outside of just the States. We've invested in over 178 companies, and our portfolio have folks from like Twilio, who's gone public, all the way to a company we just invested in that has 3 people. We believe that giving folks access to capital is one way of helping create a more equitable society.
Thank you. Mr. Lee?
Hello, everyone. It's a pleasure to be here. My name is Holden Lee. My career is really, and my passion has been about how to put together different sources of capital towards solving the big social issues of our times. And it's gone from everything from public-private partnerships to, in the last 20 to 30 years, adding philanthropic dollars to the mix. And it's not just the sources of capital, but it's the players and how to actually get those actors to work together. So my career has been really focused on trying to sit around as many seats at the table to understand. So it's everything from being in an operating organization, being at a grantee, being at a foundation, being at a private equity firm. And that's been my passion. Currently, I am CFO and Chief Investment Officer at Tides. We are a San Francisco-based philanthropic platform, half fiscal sponsorship, about 150 social projects at one time. And on the other side, 400 donor advised funds and funds. Together, we're moving about $1 billion a year annually towards issues including social racial justice. So that's me, and look forward to the conversation.
Great. Well, let's start the conversation by defining JEDI. Like anyone want to take a stab at where we started with that framing and how that's different than what we've seen in the past by just investing in diversity and inclusion? Does JEDI allow us to expand our ability to hit different types of investments? Where have you seen that in your particular work? And if you want to take a stab at the framing. Lily, would you like to jump in there? Or?
Sure. I mean, I think the key piece, I think diversity and inclusion has focused a lot on race, which I feel like is a key component. For us, in terms of our work at KPOR, it's not looking specifically at just who is it building the company, but it's looking at what are they building and what is the reason for them building it. And so we specifically target folks who are building, addressing what we call key needs. So it's not nice to have, it's not a $300 juice maker that most people can live without, but it is things like, how do we make it more equitable for pregnant women to access care? How do we help people who can't afford, the energy bill has spiked 300% and they live paycheck to paycheck. How do we make sure they don't get their lights off? And so that is, for us, is like creating a more just and equitable world by making sure folks have access to systems that are built with them in mind, and not how we have typically, think of investing, where it's just like, where can we make the most money? And so for me, that is how the framework is a bit different. It's a focus on not just who is doing the building, but it's also what are they building and what is the benefit of that.
Yeah, that makes a lot of sense. Holden?
I'll just jump on that and add one point. I think it really is much more intentional and focused on the outcomes that we really want to seek. So it's not just saying investing, applying dollars to certain populations, but it's actually what is the change that we want to seek. So it could be, for example, building wealth, building networks for access to knowledge, for institutional investors, making those connections where populations may not normally have been included in those rooms. And how do you actually invest in a way that not just deploys the dollars, but actually intentionally creates those outcomes? And I think that has been always the sort of the promise of, let's say, impact investing, but it really, it takes a lot more thought and intention, and frankly, the connecting the ecosystem to deliver that. And we were talking a little bit before that about it's the institutional investor, it's the advisors, it's the companies, and all that working together much more intentionally, I think, is the word for outcomes.
I want to follow up on that ecosystem comment. I do think that we need to look at investing in a different ecosystem than just the investor and the entrepreneur. We need to engage with not only the investor, the entrepreneur, we need to engage with the audience, whether it's a healthcare audience or an educator audience. We need to make sure they're part of the process. And finally, we need to engage, I feel strongly, with the researchers. We see so many entrepreneurs that aren't looking at what's going on in their field and come and want to get investment, but don't have the data and haven't looked at what the impact's going to be. And more importantly, they don't have a model for how they're going to assess the impact. And I think as investors and social impact. We need to help them find that data. We need to help them look at their data to make sure that they have impact, because we can only see our results not like the traditional investor that looks for his 5 times or 10 times return. We certainly want return so we can continue to invest, but we want to also have a model that helps us evaluate the impact. And I think that most of us are really focused on that.
I think that that brings up a great question on how we're measuring returns. I mean, Holden, you spoke about representing almost $1 billion of asset moving towards social justice issues. KPOR, you've been investing. I believe you have a portfolio split of about 60% of your portfolio. Correct me if I'm wrong, 60% or more of your portfolio is diversified by people of color, women in that category. How do you make sure you're also managing returns while meeting your JEDI, social responsibilities?
I think for us, one of the things, like many mission-driven organizations, we are trying to refine a sort of blended ROI framework. I mean, I think everyone's doing it. Certainly, if you're an impact investor, fund manager, you're doing it. But I would say when you're backing it up at the institutional level, which is what we're representing also, is to have that very conscious thought process. So, personally, I've always thought that the dichotomy between impact investing, is it return generating or not, is a false one. It really depends what you're trying to achieve. And I think each investor has its own risk return impact spectrum. And so therefore, it's really getting centered on what you're trying to achieve first is really, really important. And then going out to the marketplace and saying, of all the choices that are out there, how do I generate that? I think that's really important in this field. Like, what do you want to see as a change? How do you think about financial return versus impact and those trade-offs and get clear? And that takes work. It's not an easy conversation. It definitely takes a lot of work.
Yeah, I mean, on our end, I think Holden has a great point. I think there are some investors who are like, hey, if we get market rate returns, that's great, but our goal is to focus on the impact. For us at KPOR Capital, it is definitely the belief that you can do both side by side. And so, when we told our investors, we have, our first fund right now that we have outside investors, what we told them was like, hey, we're going to do both. We're going to give you venture capital market rate returns, and we're also going to do impact. And, for us, the measurement piece is something we have struggled with for a while, just because we invest across so many different industries. We have investments in healthcare, energy, fintech, food, and like the metrics that you look at in each of those industries are very different. So what we encourage and actually not just encourage, but require our founders to do is, as they're sending us monthly, quarterly updates, it's great to know what revenue your company is making, but we also want to know the impact you're having. So if it's number of free and reduced lunch students served, which is a common metric for our education portfolio companies, we want to see an update on that number. We have a company who's helping make the process for adoption out of foster care easier for would-be parents. They were reporting on how many adoptions were completed in each quarter. We have folks, it's like how many pregnant moms did they serve, how many healthy deliveries. So each of the companies, we ask, our founders when they first come to us, what is a metric that's going to grow with your business? We don't want you to create a metric just for us. Because if you truly are an impact company, it should be integrated into what you're building. And then we ask for them to report that. And then we put it together in our impact report. We're actually releasing our version. It's our 2022 report, but it's looking back on our companies from 2021. We'll be releasing it later this month, which kind of then has a collaborative story of this is the impact our companies are making, both in a quantitative version and also qualitative. So we can tell those stories of like individuals who had difficulty finding jobs and they went through a career karma and now are making 3x their income from before the program. And so that's how, for us, we feel like it's imperative to report both on our financial metrics as well as our impact metrics.
I think we need to also flip the model, and we need to give entrepreneurs out there an expectation that they need to give us their business plan with not just here's how much money I'm going to make, but what is their impact and what are they going to measure impact? And we need to get investors to be more conscious in their due diligence of looking for that. We normally start our due diligence with, well, we all say we want a passionate team. So, but then we say, well, what's your financial model? We also need to be asking and accept the expectation that we're going to ask you for what your social impact is and how are you defining social impact, so we don't get water machines. Now, water machines could have a social impact and they could have a really good job if it's clean water or something to that effect. So we need the entrepreneur to be conscious of it as well as the investor to be conscious of it. And one of the things we do at Penn when we're trying to, how do we educate entrepreneurs and how do we make them think like entrepreneurs? One of the things I've been working on personally, but also would like is I'd like to have a checklist for social impact entrepreneurs that helps them define if their social impact, helps them understand what they have to present so that they're aware the same way when we teach them about valuation and we teach them about how do you ask for money, how do you raise money, we need to include as part of that teaching process, how do you present yourself as a social impact company.
So that brings the question of capacity building, and I want to break out the capacity. Capacity is mentorship, professional development, continuing education. Providing capital is great, right? We'll not say no to money, entrepreneurs, right? But I think why we're seeing a gap, and I could be wrong on this pushback, I think why we're seeing a gap in a broader market of social entrepreneurs engaging in the field, being ready to sit in front of you, Lily or Holden, to ask for capital is oftentimes those skills that Bobby just talked about are only really taught and addressed at the top 10 business schools in the country. And maybe this is a question for you, Bobby, to follow up on. How do we start to integrate the impact metrics, quantitative, qualitative, an understanding of the development of what it takes to present to an impact-focused investor? I know I had to teach myself many of these skills from YouTube, from getting it wrong. My early days as a portfolio manager at Echoing Green. This isn't common knowledge. Should it be integrated into education programs from now on? Should we start to have access to this material for free online somewhere? Or is the expectation on the entrepreneur to show up ready?
It's a good question, and one that I actually have a blog coming out next week in my Forbes blog on this topic. So it's pretty timely. Didn't know you were going to ask that question. But how do we teach entrepreneurial mindset? How do we teach understanding of if you're an entrepreneur, and how do you present, your impact, what it is? And do you need to be an entrepreneur to have starting a business to use these skills and think about whatever career you take? I think there's skills we need to teach young people as well as people becoming entrepreneurs to think about. It's not easy because it's kind of like, how do you teach creativity or how do you teach innovation? How do you teach social impact? And if you kind of read the work of Angela Duckworth and her work on grit and perseverance, and in her book, you really can't teach grit, you have to model it. So we as investors and people trying to teach this in higher ed, or in incubators, or any program where we think we're helping entrepreneurs gain these skills, we need to model it. We need to think about it. We need to ask for that when we ask people to apply. We need to do it in our due diligence. We need to include it in our instruction. And in the book that I have coming out, we looked at it from an entrepreneurial mindset lens. What are the mindsets you need to be a successful entrepreneur and to have impact? And one of the piece of data that showed up, it was very interesting, was that clearly women have higher empathy scale or interpersonal sensitivity scale, which is not surprising, but what is surprising and something we should use in our due diligence is that leads to having better, more collaborative teams, teams that stay together longer, that they're much more focused on doing well before, or doing good before they do well. And that influences the fact that women return 60 cents on the dollar of investment versus men returning 37 cents on the dollar in investment. So I think those are all factors we need to look at when we look at how we're teaching this in schools and how we're emulating it and modeling it.
I would say, first of all, I mean, I think that the ideal of entrepreneurship needs to be reframed. And so much I think of, you know, I grew up in Hunters Point in San Francisco. I'm like, those were the most entrepreneurial kids ever. Like everybody was on the street corner, not selling drugs, but selling something. And, you know, I think of it now when you hear these stories of these kids getting arrested for selling water without a permit. And I'm like, no, those are early entrepreneurs. Those are the folks who have that spirit, who are like, hey, I'm going to go out and buy a pack of water from Costco and, you know, make 50% profit on each bottle I sell. Those are the folks we need to be promoting and being like, yeah, you're a young entrepreneur. Like, how do we grow your business? And so to me, you know, kind of changing, like an entrepreneur is not just someone who's building an app on their computer. And that those are usually the folks we highlight. So I would first say, like, let's reshape what it means to be an entrepreneur. And let's definitely give those kids with this entrepreneurial spirit resources so that they can, you know, that grows even further. The other thing I would say is, like, for me as a VC, like, I don't wait and just wait for, you know, ideas and things to come to me fully baked. I feel like a big part of my job is having conversations like this. Like today, this is my third panel. I was at a pitch, you know, I'm at Berkeley right now at the university doing a pitch competition. And, you know, I feel it is my role in the ecosystem to help nurture those folks who may not be investable yet. It's also selfish because if you get to them before they're ready, they're going to remember, hey, this person helped me. And now that my business is investable, like, let me go and like go talk to her. And so then you tend to get first dibs on things. And I feel like, you know, Bobby, I feel like you took the extra step, you went to YouTube. But what about folks who don't know, or even YouTube, you know, not everything there is quality content. So how do we make that content more available for folks? You know, at Caper Capital, one of the things we did pre-COVID was having like an entrepreneurship boot camp series. Every Friday at our office, we would bring in, you know, different founders who would talk about different aspects of building your business. It was free to whoever signed up. We would offer dinner and just kind of provide that guidebook towards building out their business. And we tried to make that accessible to everyone. We're based in Oakland, so everyone in the Oakland community, and use kind of food as a tool to attract people who would normally not come to that stuff. And we've had people tell us, like, I was just hungry, I saw free food, and then I came, but then I thought, oh, I have this side hustle that I never thought could be a business. And like, after hearing and seeing speakers who look like me, that kind of encouraged me to pursue this further. So, you know, food is the hook, and then the knowledge is hopefully what gets them to stay and keep coming back. So more tools like that. And I also think there is a shortage of early stage funding for everyone, but even more so for people of color who don't have, you know, we talk about friends and family around, everyone says, I am my friends and family. I am who people call, you know, when they can't afford, you know, they have a parking ticket or emergency expense that comes up. And so how do we provide more grants, you know, maybe through foundations? How do you provide more non-dilutive funding to help those founders go even further and to take the risk of building their business?
I think one of the things, as you were saying, we need to redefine entrepreneurship. I absolutely agree with that. And often in serving communities of underserved and communities of color, we also have to change the filter. What you just described, we would normally have called starting a small business. We have to get them from understanding that they're starting a small business to thinking like an entrepreneur. And how do I grow that business? Not in a negative way, because sometimes people say, oh, I don't want to grow, I just want to service these people. But how do we take them from a small business mindset to an entrepreneurial mindset? And that's not an easy thing to do.
You know, I love this conversation. I'm going to add one more point, and I think there's a responsibility of funders also to contribute in a positive way. So what we've been talking about essentially is how do we level the playing field for communities of color, underserved populations don't have the same kind of networks and don't have the same knowledge. So they're operating at a deficit. When you think about it positively, there are so many opportunities that they embody. So that's the exciting thing, right? Even as an investor, there's an upside to engage because there is opportunity there. Just to give you a couple of examples, should a small emerging fund manager or entrepreneur be expected to complete a 100-page RFP to be able to respond to a large institutional investor? I'm just making a point, but you know, so for example, there are ways in which the system presents obstacles to increasing that access. I think the idea around knowledge, so for example, Tides, we've got 150 at any time, you know, social ventures going. That's a lot of knowledge just captured right there, right? A lot of experience. How do we actually bottle it up and share it so that we, again, try to help level the playing field? Because a lot of capital flow is, frankly, it's relationship, network, and information, right? So how do we actually find ways, and I'll just say as investors, how do we actually help level that playing field ourselves without, you know, adding to the problem as well?
Yeah, I'd like to touch on a few things. I think one of the important comments I think Lily touched upon is being able to fish further upstream, being able to meet people where they are. That is, I think, is an underutilized area of focus for many early stage investors, and early stage not being the typical, you know, $500,000, $250,000, $1 million investments, but how do we start to invest in people who have seed stage ideas at 20 to 75,000 and be able to get them? You're not ready now for us, but why don't you talk to this fund who we work with, who provides mentorship and some basic management structure? I think even, and this might be too early for most investors, but if we're serious about broadening the net of diversity and who we're actually getting in the room at the table to pitch, it has to start earlier than individuals who are ready to make that $500,000 to $1 million pitch. It has to start, if not in school, because even in my educational pursuits, a focus on social impact metrics or development of social entrepreneurship isn't really the main focus. You know, you'll get the standard finance, you'll get management motifs, you'll learn Porter's 5 forces, but that's not preparing you to necessarily go out and be able to measure social impact, know who to contact within a space. And some of these things are outside of what we now and currently classify as management or entrepreneurship. Some of these are just executive functioning, right? How do I build my network? How do I start to read the right books? My second point, I'd like to expand on that, is as we're even framing entrepreneurship, I want to make sure we understand that we're speaking about, in large respect, privileged Western styles of entrepreneurship. I spent a year studying entrepreneurship and working with entrepreneurs in South America. And I'm from Jamaica, and I'm an immigrant to the United States. My family, they will tell you entrepreneurship looks like going downtown to Kingston, Jamaica, to the wholesale area, buying fruit from wholesale vendors, chopping that fruit up, bagging it up, standing in the middle of a busy street, and then selling that to be able to recoup. And that's just not Jamaica, that's most countries in the world, right? Entrepreneurship in America is a privilege for many. It's a means of survival for most. Largest profession in the world. So how do we start to make sure, and in the work that we do at the School of Impact, reaching out to community colleges and state level universities to get them better engaged in reaching demographics they typically don't have access to or don't really target, how do we start to develop, as I say, upstream innovation or upstream funders who have the capacity to work with entrepreneurs coming from a varied background, right? Like, so what does KPOR do to not just the capital, but I know you're famous for this, right? You can't get $1 from K4 unless you can show how your HR team is investing in and putting together the right diversity team. Like, how do we start to make some of this stuff mandated?
Yeah, I mean, when you were saying, first of all, when you said in Kingston, I was like, I got flashbacks. My family is Nigerian. I'm like, that's my favorite part. I would joke and be like, you can buy everything you need on the way to the grocery store. And so you get there, it's like the person's selling toilet paper is there, the toothpaste, and you got there and you've already done your shopping. And so you're like, I just guess I should go home. And I always thought like, these are the most entrepreneurial people I've ever met. And I'm just
Absolutely.
like, and so when we see such low numbers of people of color and like, you know, folks saying like, oh, people of color don't like, and I'm like, don't like entrepreneurship. Have you ever been to any of these places? You see they are the most entrepreneurial people ever because they have to, because there's just not enough jobs. They have to, you know, go out there and they take control of their destiny. For us, it is, you know, I think there's a couple of things. For us, we've created what we call our founders commitment that came from our founders that's saying like, hey, it's not enough. Even if you do have a person of color as a founder, you need to build diverse teams. So this was a mandate we started at KPOR, but other folks have started to adopt it as well. We have LPs who've adopted it. We have other incubator programs like Techstars who are like, hey, can we use this too? And so again, it's going out into the ecosystem and kind of preaching the gospel of inclusion and diversity in entrepreneurship, and telling people like, you know, it's not enough to just have folks sign this, but you have to provide tools, you have to provide funding to help people adopt it. And again, you know, I don't know if it was Barbara or Holden saying this earlier, but having these integrative systems so we don't believe, you know, VC funding is going to fix all. KPOR, we're lucky enough to have a foundation where we make grants out of that into entrepreneurial endeavors to help grow entrepreneurship in all communities. And we also have our SMASH program, which is Summer Math and Science Honors Academy, taking high school students from low-income backgrounds who are interested in STEM careers and teaching them one of the required courses is entrepreneurship, and they have to present at the end of the summer, like come up with a business idea. And let me tell you, these are some of the like best ideas. Every summer I'm blown away and I'm like, hey, can you quit high school and like go work on this? Because it's just, it's so amazing. And so for us, it is like it's taking a multi-pronged approach to make sure, one, we're putting our money because you need to fund those programs dedicated to entrepreneurs. You need to then fund the entrepreneurs, and then you need to even more so start early and give the students access to that curriculum you talked about. I think, unfortunately, you know, we're in 14 locations. We would do more. I tell Mitch and Frida, I need you guys to make more money so we can, you know, invest in more students and have more folks be a part of the mission, but definitely taking a multi-pronged approach. And then, you know, changing the narrative. I think for me, I see it as a personal mission. I've been blessed to be in this position, one of power, when I can give out money. And I think more people, you know, I have to go out there. People have to see me so that they can see folks who look like them and then see that it's attainable. Because when I started in venture, there was like literally one person of color who was a partner at a firm, and just her, like she was who I looked at, like I'm like one day, but just having that one person propelled me. And now thankfully there are a lot more people, but I feel like it's important for us who are now in these roles to kind of reach back and bring those folks up as well.
I think that that's a really important factor that we could give money. I now do angel investing because I'm lucky enough to have done well and now, but I know it's not the amount of money I invest that I think when I pick people, it's what else I could bring to the table. So giving somebody $20,000, as Bobby said, is important because they don't have access to sort of that startup capital, but that's not going to get them there. That's not enough money. What you have to bring to the table is all of the other features, the mentorship, the business acumen, the connections, the network, the ability to be there when they have to call you with an issue. And so most of the people, unfortunately, giving out seed money today are not bringing those other factors to the table. So all of the angel funds are giving people 20, 30, maybe even as much as $50,000, but they're going to fail if that's all they're bringing to the table. The company's going to fail and the investor's going to fail. And I don't see my investment as a, as I tell my children, I said, I'm investing not because I'm going to get a lot of money back that you're going to get, but I enjoy this because I get to be involved, and it's more fun than losing it in Las Vegas, because the chance that I'm going to get rich on one of these is very, very small. So I said, you're not going to get it anyway. So now I get to do this. But what I do bring to the table is not the money so much as the other things they need.
I think what we've been talking about, the entrepreneurial landscape is a tough one. I just mentioned your story about the person selling bottled water didn't know that you had to have a permit. I mean, that's just the tip of the iceberg, right? You've got regulatory. Who knows how to navigate the gap between friends and family, Series A, and up the chain? It's very technical, a lot of those things. And so mentorship is definitely one way to help overcome those gaps. I would argue that the ability to develop trusting relationships is not an easy one, right? It's not like you meet someone, you're matched on Zoom and off you go. It's very hard. It's like, dating relationship. It's very hard. And I think, Barbara, to your point, it's also not a fast thing. I think, one of the challenges of marrying angel investing to a deep trusting relationship, it's almost counterintuitive, right? It's not just writing a check, and also, frankly, not everyone who's an investor is set up to be a mentor. I mean, it's a slightly different skill set. So, it's just like, people have different skills, but mentorship is a very effective mentorship is really challenging. And I would argue effective mentorship where you can develop a trusting relationship with these communities. I mean, how do the set could be very, very narrow of people who have done it, who could do it. So then maybe the question is, how do we get more of us better equipped to do that? That's probably a gap in the ecosystem. It's, we all of us have the ability to do that. Do we have the ability to do it well, or do we know how to do it? That might be a way just to kind of think about where we need to collectively aim some of our time and attention.
We've tried at Penn to offer our work to venture groups and to private equity groups. And it's very difficult because most of the people that are working in these organizations have come up through the finance side, and they don't understand the ecosystem. And frankly, it's not that they may not want to learn, it's just that they barely have time to do the due diligence that they have to do to make the investment, to spend the time to look at this other side. So the growth of your work at Kapoor and your work at Tides is really important. And there's a growing number of these organizations that are saying we need to take the time to understand our communities, to understand the data, and to understand the impact. We know how to do finance, but we don't really know how to do the other side. And that takes time and effort, which most of the traditional venture groups and private equity groups are not ready to do.
Bobby,
one aha.
Go ahead, Holden.
One aha that I personally had, there's been a mantra, at least in the mission-driven world, nonprofit world, 30 years ago, why can't you be run more like a business? We've all heard that, right?
Yeah.
But I actually think in this new world of impact and ESG, there is a way in which traditional investors need to really deeply absorb the theory of change idea, which is coming from philanthropy. But it's almost like, neither side has the full answers, but there's a recognition that you really need to, borrow from the best of both in order to create the model to go forward. That's just something I've just come to my own realization.
I sort of came to that when I was finished. I ran, a big private equity group called Core Learning. We invested in some of the education companies around the .com. Then Scott McNeely asked me to run his nonprofit, Curriki, in the education open source space. And then when I was kind of thinking what I would do next, I went to the university and I said, graduate schools of education need to change or they won't exist in 10 years or 20 years because we're not teaching the right. And I said, I'll come and work for you if you let me head up innovation and create these new models. Well, the dean was ready to shake up the Graduate School of Education at Penn. And so I was lucky enough to be there, but that's not the case in most business schools or graduate schools of education or design schools, although even though they claim to be innovative. So it's something that we're seeing a lot more change happening. And I think the students that go through our programs at Penn have the opportunity to think differently, but they're going out in a world where not a whole lot of the investment community is thinking that way yet.
100%. If I can say one, I think people want to see different outcomes, but they're going in with the same metrics. And it's like, you can't end up at a different point if your starting is the same. And so it's like, everyone's like, we want more diverse fund managers. We want more diverse founders, but the same ruler that you're using, what you think makes someone good, is the same. And you can't, if you want a different outcome, you can't take the same approach.
It's been an interesting journey for myself, because I started as an academic, PhD teaching in universities, and then was recruited by an investment bank because they didn't know anything about education and ed tech when they're first getting started. And at that time, I didn't know the difference between an investment banker or a commercial banker because I didn't have an MBA, but I thought it was relatively creative on their part. They said, we'll teach you everything you need to know on that space if you teach us everything to know in the ed tech space. So it was an interesting journey on both sides, a learning experience. And I watched them seriously think about it. But what they didn't think about was they still had this mentality of who they should invest in. They weren't thinking diverse. They were thinking still, well, I don't think this diverse community, if I give them money, I'm not going to get the return on my money because there's no history. So it's a chicken and egg problem. We have to seed that, to create that model. And as you said, create models that say, oh, I can do this. Look, she did it. And
yeah, I love the part about removing the rules, changing the rules. So as a former investment consultant, one of the most interesting examples of an assignment was when the client basically said, well, we want to do impact investing and we will take first-time funds. So when you remove that kind of historical constraint, you're back to the basics. Like, how do you actually evaluate in a rigorous way? Because I think you still have to be disciplined. You still have to be very intentional. But the skill, you can't take the easy out. No first-time funds. So that's where the investors can change the landscape.
What I'm really looking for, and I haven't really come out with the model yet, so hopefully somebody in the audience or you all can, I think we need to figure out a way to help nonprofits be able to access, not just through grants, but be able to access equity funding in a new way to return. And I think there are some beginnings to models. PRIs are doing it, and some of the other models. But I think there's something out there, another vehicle or another asset vehicle that will help us get there, because so many social impact players start out by thinking they have to be nonprofit. And what they don't understand is that they can have the impact and yet return equity to the people that will support them. And I tell my entrepreneurs that come to me that are nonprofits, I said, it takes just as much work to raise money in the grant space as it does to raise money in the equity space. You just need a different mindset. So we need to have a way to help these nonprofits. And I know we still have to deal with all the governance and the rules in the US about and globally what a nonprofit is, but we have to have a way to help them either understand how to raise money on two sides of the coin, or how they can move from one side, the nonprofit, to the for-profit, or from the for-profit to the nonprofit. I have a very successful company that's in Tanzania that started as a for-profit, Ubongo, and they do animation, and I love her. She's an amazing entrepreneur, and it was a struggle for her to realize she needed to go over to a nonprofit world from a for-profit, and she's done extremely well in raising money. But now we were talking a few weeks ago, and because she's one of the women I profile in the book, she said to me, now I'm having to think, do I need a for-profit? Do I need to be raising money in both sides of the coin? And so I think we need to be, as social impact investors, thinking about what that new model should be looking like.
I can, Since 2011, that was a struggle for myself. And when I first started, I was 19 years old, right out of college, and wanting to make an impact in the Detroit education market, providing after-school tutoring and fencing. And I started with, I have to be a nonprofit, because anytime you want to do community work, people say go start a nonprofit. Many of the entrepreneurs that I work with at the School of Impact as a coach and an advisor, that's often one of the first questions, and it's a tricky one. It's hard to teach that. One, for legal reasons, you shouldn't provide that information unless, for certain, unless you have some legal and accounting background. But bifurcated business models are still new in the US. In the UK, they're so far ahead, it's ridiculous. The town of Bristol, UK has a fund for social entrepreneurs opening up small businesses that is piggybacked off of taxes. You have social innovation investments coming from the government. In the US, we're now just getting started with low profit, limited liability companies from first started in Chicago. And then, it was tested in about 14 different states in the US. For the nonprofit to be able to have access to the best of both worlds, you're looking at drop downs of organizational structures that oftentimes nonprofit leaders justifiably are confused or a little hesitant, because they want to avoid unrelated taxable income expenditures. And so I often advise organizations to find sponsors, to find organizations that are willing to hold the nonprofit funding for them and work with them as a fiduciary if they're a for-profit, or the other way around, be able to use their nonprofit status, and generally speaking, only if they have intellectual property that they're holding into another segment of the organizational structure. That way, the intellectual property can be used to generate equity investments if they've exhausted non-dilutive equity opportunities. But again, that is often not taught. That's a big lift for most entrepreneurs, just figuring out how to get their first customer. And so I think, we're getting into the time here. I think one of my last questions is, where does the university or accelerator incubator universe play in continuing to develop the talent that we need further downstream in the future? How do we start to catch up to some of the international models? I know, Bob, you talked about program-related investments. Mission-related investments have been around for about a decade as well. Social impact bonds have been highly popular with social finance out of the UK. And by 2010, 2011-ish, you had social finance US. So we have tests. We have a decade of these models of different financial structures that support entrepreneurs. We have the L3C as well, community investment corporations. So there's history there, there's quantifiable history. Where we need to go is, how do we start to get a structured definition of what social entrepreneurship is? How do we start to create pathways for people to engage in the intellectual pursuit, to understand what their different options are, and then be ready to sit in front of an angel investor like yourself, Bobby, or Holden, when they're ready for the big VC capital, Lily, when they're ready to come to talk to you about some major dollars. How do we start to create that further upstream talent? Like, is it the university's responsibility? Should this be the community's responsibility? Should the big startup investments at the local level take this on? Like, who's responsible for this?
Well, I don't think we have enough time to address this topic in the next 10 minutes, but just as we're sort of struggling with what Web 3.0 is, and if I was just at the Global Silicon Valley Conference in San Diego and I heard, all this talk about Web 3.0, I do think we need to rethink what we call incubators and accelerators. The current version of them are not working. And, I was at the very, very forefront of creating one of the very first university-related incubators at Penn, but it has evolved, and, we went online before anybody else did, and then others began to. I think as we look at how learning is going to take place going forward, whether it's in education, any field, we're going to have to adjust how we look at incubators in a new way of learning. And our learners and even our entrepreneurs today want just-in-time learning. They want, quote, tutoring and mentoring online. They want to be connected. They want collaboration. So we need a different tool. There is a sort of stealth startup that's been highly funded that isn't out yet, creating this platform to help entrepreneurs learn in the way that they're learning other things today. So it's kind of a combination of YouTube, TikTok, all of the things that are going on, and we're building a community around that. The issue is changing the way we teach entrepreneurs, and the more importantly, also the communities that we build around that. We need to engage in bringing in the diversity and bringing those people to the table. And we can do that if we go to the place where they're starting from, what technology they're using, where are they gathering, how are they collaborating, what are their resources? And those need to be part of these new platforms. And whatever that's going to look like, I want to be part of. And I think I want to be part of the process of thinking about it. It's going to be fun, and we're on a new ride, a new journey.
I'd love to see you on TikTok, Bobby, honestly.
No, I'm good.
Lily?
You know,
Go ahead, Holden.
I connected dots to something that was said at the very beginning, right? It's back to intentionality. What are you trying to achieve? And so what is the problem we're trying to solve? The problem that we're trying to solve is we've got great talent that happens to be in communities that are not connected to the mainstream. So if that's the problem, how do we redesign everything from knowledge networks? We've been saying this before, and now even back to, how do we educate and share? And the hypothesis, if we solve that, then it is kind of sky's the limit. And for everyone, it's a win-win. It's a win-win for the entrepreneur to create, to do their business, create their own wealth. It's societally, it will solve problems. And for investors, we can achieve our objectives too. It's either, make money, have it impact everything and everything in between. But so that's the promise. But I think we do come back to what are we trying to solve, and be very clear about that. And then recognizing that we've all said the current system is not designed for that. So just, we know that.
Yep. So.
Yeah, I would also love to see Bobby on TikTok. No,
you'd be better on it than me.
I love that. I mean, we actually have our students have actually forced us. And so if you go to, so KPOR, the foundation has a TikTok where they have started talking about entrepreneurship. But we used our SMASH students for that because we didn't want to look crazy. So you will not find me, but you will find some SMASH students there. And they've done a great job. I would say the other thing, it just reminds me of very early on when I was like 14 and a half, and I'm like, I want to get a job. And there was, your local employment development office had all these career services. And, they had like a high school program to get students like their first job. And that's where you went. And I'm wondering now, I know in the latest infrastructure bill, there's money set aside to put into small businesses from the government. And so I think, and maybe I'm a big government type person, but I very much do believe that the government has, or, on a daily, weekly basis, they put so much money into these large corporations through the forms of tax breaks and everything to help them survive. But I feel like we need to go back to basics and have them, start doing those programs for folks who are starting out. There used to be a huge program around the Small Business Association had huge government grants. So it's just like, to me, it's like, how do we have them do the programs, or, fund programs that are doing that? Because either way, then those programs, you can kind of distinguish the bad from the good. Because I know that there are people out there kind of selling snake oil, like, hey, we'll help your company, make $1 million, and they've never built anything in their life. So I feel like you need to have a differentiator, from like, this is good information, this is bad information. And then, I do feel like school education is a big thing. And like the world of work looks so different now from that of our parents and even our parents' parents. And so people don't stay in jobs for lifetimes. Folks usually have 1 or 2 side gigs that they're working on. And so integrating the new world of work into the world of education and helping train folks up for that world, I feel like is a way that we have our, students in America, employees in America compete on that kind of level playing field to the rest of our colleagues internationally. It does need to be integrated. We need to kind of change the system of learning and introduce creativity and entrepreneurship and innovation into our curriculum. I'm not, I don't teach at the School of Education, but I do know that there are schools who are making those reforms, and I would love to see more of that.
And there's a lot of money goes into those things, and I hate to see it not. The problem is the people that know about it are not the people that should be getting it. So when we had the grants for the regional neighborhood ones, it ended up that all the real estate developers went out and got that money a few years ago. Was designed for, by Trump, and was his real estate people. So we need to make sure that the communities we want when this new money is available know about it. I'm constantly telling my investors, you're not looking in the right place for money. I mean, most of them don't know about SBIR grants because it's not in what they're thinking about. They don't know where to go to get this new money. So I think it's incumbent upon all of us to make sure that if this money ever gets approved, and as new money gets approved, that we find a way to put that out into the network that needs it.
I'm going to present one question from the audience before we go. And I know you're all very busy, but let me get this one question just so we can have the engagement. Francisco asked, thanks for the great session. Most of us who are in the impact investment space do not have enough track record to please investors or NPOs. How do we present opportunities that you see very clearly and reduce their expectations to invest or give? I'll throw it out to the panel. I believe that's a question of how do you present an opportunity for investment? And I think that depends on whether the organization is either investing at market rate or below market rate, if I'm framing the question correctly.
Yeah, I mean, I think for me, what I tell folks, we work in VC, it's supposed to be the most innovative space in investing. Bobby mentioned earlier, she's like, it's better than blowing it in Vegas. So it's a risk industry. And so much of what I tell my colleagues is just they've taken all the risk out of investing by just they're like, this is the last 3 things that I've done really great, so let me just copy that. That is not a recipe for innovation. And so it's getting folks to shift the mindset and saying hey, you have to take this risk if you want to change the way things are currently going. You can't invest the same way you've always been doing that. And so for me, it's also that's something I have to remind myself is I want to see a different world. And to see a different world, I have to invest in different things that don't exist and don't look like the things I invested in last year or the year before.
And I think I tell my entrepreneurs, go ahead, Holden, go ahead.
No, go ahead, Barbara.
I was just going to say, I tell my entrepreneurs to tell me the story, don't present the pitch to me. And so we teach entrepreneurs to tell stories because that to me is where social impact comes. That's what I relate to. I can help a young entrepreneur get the pitch right. I can't help them tell the story right. They have to tell their story.
I was going to say 2 pieces of advice I always give to new fund managers. You have to be authentic to yourself. Don't chase what you think the investor wants. So that's one. The second thing is, why are you distinctive? Not just that you have a good idea, but why is your idea different and or better? I think that's important because the investor is looking across a menu of opportunities. So you have to help stand out.
So with that, we're at the close today, and I don't want to keep you. I know you all have very busy schedules. I want to thank you so much for attending the Skoll World Forum Ecosystem Day, hosted by the School of Impact. Great information, great insights. We had some laughs, and I hope that this was also beneficial to the audience. If you have any further questions, please feel free to reach out to me either on LinkedIn or via email, and I'd be happy to connect you and provide any further details. Thanks everyone for coming today. Thank you for attending, and I hope you have a great weekend.
Thank you. Nice to meet you all.
Thank
Bye-bye.
you.
Bye-bye.